Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I've got 5 rock solid stocks that have just crazy earnings growth potential over the next couple years, but at the same time are offering great value even at today's prices. On paper, they don't look like great values because the market is trading so high, but when we peek ahead to the forward earnings potential for these companies that are all names you know, you'll see that there is some value and growth mixed in with these names. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before taking on any investment. And of course, if you like stock market analysis and personal finance videos, please subscribe to the 40 Finance channel. Give this video a like. Thank you to everybody who has supported the channel so far. All right, so just to set up some basic parameters here, we've got 5 large cap stocks that I believe offer a combination of value and growth at their prices today. We're going to rely on analyst opinions for EPS growth projected in the future, compare that to the price today, and that's how these guys all made this list. We got no penny stocks, no stocks that don't have products, no stocks that don't have PEs or earnings. These are all fundamentally sound companies at the end of the day. All right, first stock on the board today is Micron. And you see the 1-year chart here for Micron. Back in February of last year, you're at $57. Now you're up to $80.30. So a nice little run for Micron. You go down, and even at today's PE ratio of 30.26, it's not as bad as some of the overvaluations on the market. You got an EPS of 265. And if you're not familiar with Micron, they are a chip manufacturer dealing mostly in the memory space. But let's take a look for why I picked out Micron. We're going to go to the Analysis tab on Yahoo and take a look at this EPS growth that's projected for Micron. So this is the current year of 2021 for their fiscal calendar. The expectation is $4.15. Year ago, you were at $2.83. And next year, which for their fiscal year is 2022, guys, they're looking at a $7.93 EPS estimate. You do have a high of $13 and a low of $4.91. So there's a lot of mix in there, and you can't always take this as sort of law. But do some research on this company because analysts are definitely projecting some high earnings coming through on Micron. Off the screen here, I'm going to do a quick calculation. If we take $80 for the price and divide it by 22 EPS of $7.93, that puts you at today's price at a PE of 10 for the year 2022. And while 2022 seems like a long way away, what's going to happen with all these stocks I have here today is that the expectations for 22's fiscal year are going to bleed into the back half of 21. So if Micron continues to make pace on this expectation of $7.93, we'll obviously be seeing a lot of it in the news. And a lot of those updates are going to come in that sort of August, September, October range. So you can potentially sneak into this one early today just by using some basic analyst information. All right, next stock on the board is Disney. And I have to admit with Disney, some of this run up, this is a 1-year chart, by the way, some of this run up that we've seen on Disney has actually baffled me because the parks are such a big part of their earnings, more than 30%. I want to say it's like 35%. And you can see, you know, back in February, they were at 140. We all know what happened through here, including the rise of their streaming platform. And now you're actually trading higher than you would have seen in February last year, mostly on bullish theories about streaming. And of course, the concept that parks will be reopening to a much larger capacity at some point in 2021. Looking down at the metrics today, they've had a couple negative quarters as expected, I would argue, with parks being down, so you don't have a P ratio today. And if you don't follow Disney, they did suspend their dividend And there's a lot of talk. I don't know if it's official yet, but they may not offer a dividend in the future because of the growth they've seen in streaming. There's consideration about using that money for further investment. All right, let's take a look at what analysts say for Disney. Last year, $2.02. This year, going the wrong way to $1.63. But 2022 again, $4.78 for 2022. That's what analysts are projecting. You've got a high of 615 and a low of 292. I'll do a quick calculation here off screen. 170 of today's share price divided by an EPS of 478 gives us a PE for Disney at 35. So we're looking at Disney at a company with a negative EPS, and then we're going to drop that PE all the way down to 35. And with Disney, if you want to make a bet on the travel industry, but have some protection to the downside with streaming, it just feels like a good investment across the board. But you are going to have to jump in sooner than later, because once parks open, I have a feeling this stock will gain another 20% just on the good news. All right, next on the board is Ulta Beauty. This is a specialty retailer that deals in cosmetics, hair, all that stuff. Very popular, fast-growing retail outlet prior to the pandemic. Obviously, a lot of stores were forced to close during that time, so you had a rocky year. You've reached about the point, as you see the chart here, to where it traded last year at this time. If we scroll down to the metrics, you got a PE ratio right now of 73. That's obviously a little high for a retail store, but we'll get to that in a second. And even though Ulta faced some challenges this year, they still brought in an EPS of $4.01. Now let's take a look at what analysts think going forward. And this is another one that I found that was just amazing. So last year, $12.15 in their fiscal 2020. That's obviously with stores operating at a much fuller capacity. This year, you drop to $3.39 when this fiscal year ends. But then next year, you're bouncing right back to $10.60. So this is a little bit of a rebound play for Ulta. And if you take that $10.60 and roll it into that $2.95 price, you get a P ratio of 27.83. And I think what I like the most about that too is you have this situation, $10.60 doesn't even fully grasp what they had in 2020 at $12.15. So I think that there's a lot of upside from here for Ulta Beauty. All right, next on the board is Vertex Pharmaceuticals. This one had this drop off you see on the 1-year chart, basically because one of the drugs that they were working on, they decided to pull out of it. So, people were disappointed about the prospects for future revenue. However, this company has a very strong hold on the cystic fibrosis treatment market, and they're well renowned in that space, and they have other things on the pipeline. So as far as I'm concerned, this is sort of a weakness opportunity. We go down and we see, look at this, $10 a share in EPS. You got a P ratio of 23.61. And then when we look at the analysts, we go from 10.38 to 11.50, which isn't the biggest jump in the planet. But one thing you may not know about Vertex is their incredible prospected growth rate over the next several years at plus 25%. So the plus 10% that we see in growth prospects for just this year is only the tip of the iceberg. So in my personal opinion, I think that Vertex is trading at a discount relative to its past performance and the things that they're working on for the future. And, do your own research, but there might be something here on a rebound play. You only have to go back to July 20th to see this one at $300. No doubt it'll get back to that point when some of these storm clouds pass. All right, next on the board is Netflix. And this is one I've been talking about on the channel a little bit. And I know it's not a sexy pick, but you guys have really got to see what they're doing on earnings. Today's P ratio of 91.86, You've got an EPS of over $6. And I didn't talk about it, but you see the 1-year chart. You know, this time last year, you're in the neighborhood of 387. You've added a couple $100 to that almost today. And this wasn't even the awesome part about Netflix being in the past. The awesome part is how this company is generating profits in the future. So you see we're in fiscal year 2021. You've got an EPS last year of $6.08. This year, it jumps to $9.89. Next year, you basically add 30% to that to get to $13. And the quick math on that, 559 divided by 13 brings your P down to 43. So in this world today, you've got a P of 91.86. Yeah, it's expensive. But if you see a price dip for Netflix, just know that you're already staring at a 2022 PE of probably around 43, and you've got great prospects for the future. I didn't show their growth rate, but we can scroll down here real quick. Next 5 years growth for Netflix, 44%. I don't think a lot of people know that because they haven't factored in enough on the international side. We know what's going on in the United States. You know, you'll run out of people at some point, but international is a whole nother game. So add Netflix to your list of safe and sound growth value opportunities. All right, one of the things that I forgot to do as I was going along was just checking TipRanks to see what the best performing analysts think of all these stocks. So we'll go through it really quickly. We've got Micron, price today of 80.47. We look down at the 4- and 5-star analysts who are rating it, and we try to refresh and make sure that we have the newest dates. And these are projections over the next 12 months. And you can see pretty much across the board here, it's all buys, right? You got price upside anywhere from plus 24%, you know, up into the 50s for a couple folks. So that's Micron. All right, switching over to Disney at 170. Looking at the freshest ratings, which we have several over the past few days. Mostly buys, couple holds in here, but you've got another 17 to 20% on the price upside according to these particular analysts. And don't forget on Disney, and Micron for that matter, 2022 is the year, right? We're getting in now for a huge EPS boost in 2022. That's the game that we're playing as long-term investors. All right, Ulta Beauty, take a quick scan. Not a lot of recent activity. Most of this is about a month ago or so. But you got anywhere from plus 5% up into the double digits for over the next 12 months. But, you know, Ulta's another one where the game is 2022. So you're getting now with upside, and you're holding to win when that EPS gets back into double digits in 2022. All right, Vertex front, you got a price of 240. And looking down at the fresh analysis, we've got mostly buys. Upside of plus 25% down to single digits. So you're not going to make $1 million overnight, but with Vertex, you do have the opportunity today to participate in their projected plus 25% growth per year over the next 5 years. That's what the target is here. And you could argue you have a stock that is on a little bit of a sale, and it can give you some short-term upside and some long-term deep upside. All right, and finally, Netflix, today's price of $5.58. Remember, Netflix was one where the EPS is just going to blow through the roof. And no surprise, lots of buys, you know, 1 sell, 2 holds or so, something like that. And price targets roughly between 15% and up to 25% or so. All right, guys, so those are 5 stocks that right now I think have a good combination of value and growth opportunity going forward. These are all longer play ideas where you're getting in today for, in what some cases looks like a high price. but the future looks even brighter than today. And they're all stable companies that you can feel really good about owning and not lose a lot of sleep over, which is, of course, a big bonus. So let me know what you think of these 5 value growth stocks. Leave a comment below. Thank you for watching. Please leave a like and subscribe. We'll see you on the next video.